Okay, guys, Bob and Phil here from Trade Genius. Something happened in the markets on Friday that only happened twice in the last 3 years, and both other times the market had significant sell-offs. Stay tuned.
Trade Genius.
Hey, so Phil, this chart's your baby, and today we hit another level which almost guarantees a market sell-off. Do you want to throw the chart up and show people our basically our infamous Fed liquidity charts?
Yeah, so we thought we'd give you guys a heads up on this. Normally, the newsletter subscribers will get this information, but we thought it'd be prudent because so much is in the air right now how bullish everything is, and we thought, well, we've been warning you guys, so now what we really watch for is this. We're getting readings now that we've been waiting for, and that's this euphoric reading that we're getting now, which means that the market compared to the liquidity in the system, which is represented by this blue area, as it dropped off a whole bunch and the market continued to go up. And sometimes that happens. That happened last August too, where we had this really sharp rise. You'll notice down here we hit that euphoric level, and then what happened? Boom, big drop. And the other thing too is our breadth is overbought, and that's over here on the left side of the charts, and that's basically measuring how much of the market is up versus advance versus decline. And it's a little different than what's out there on this calculation. But essentially, every time we've been at an overbought level like this, where it's telling us that the breadth is overbought, basically there's just too much buying, it's overdone. And we also have this situation over here where we're either at the short trigger or the euphoric trigger. Every time that we've had both of those coincide, I drew a little circle here in red, and you can see that coincides, well, it precedes actually pretty steep drops into the next leg down in the bear market. And so here's another one, and here's another drop, and then so it's like you don't want to be going long when this stuff starts firing off like this. And especially we kind of think we're at one of these larger tops here in the bear market cycle. We've had a series of these. Here's another example here. Up here, big drop, signal here, big drop. So we think we're at one of these upper ends of the like a lower high basically in this bear market rally. They may want to try and mess around and get that double top come Monday maybe, or that's it. We might have seen it. Well, so the way we like to play it is basically give us ourselves enough time and room and not get too over leveraged, but take a bearish position here. And so that's what we're doing. But we thought, given the strength of these signals and how consistent they've been in this bear market, that it's just basically ringing the alarm bells here. We could potentially be rolling over quite hard. And, Powell, he's been talking very hawkish, and like the market's just kind of giving him like the middle finger here with this move. They're not believing him, right? For a lack of a better example. And so, he could come in and just be like, look, I told you guys not to make me do this again, and here I am. So it's just risky, because if he comes in with really hawkish tones about staying the course all through 2023 or possibly 2024, and they're removing liquidity, which I think is the more important thing. They can talk all they want. It's about what happens with this liquidity. And the big difference here was the banks were driving this up. So if you'll notice over here on this chart, we have basically we try to figure out, is the liquidity going up or liquidity going down? Because it can be quite jagged. And so we kind of added some smoothing in to figure out, is it trending up or down? And then we get these risk on, risk off signals. And, over here, people were thinking that we were getting a little overbought, but we got a risk on actually. And the market initially pulled back, and that was off of some of that Japan stuff that was going on with their bond market. But we noticed that the liquidity wasn't relenting, and we kept talking about that hey, they're not, even though things look a little sketchy, liquidity's still going up. And it went up until this week, where we found out that the Treasury was actually now pulling liquidity out of the market. And so when that happened, then it forces the readings now to tell us that we shouldn't be up here, because the actual amount of available liquidity to the markets isn't where it should be for where the market is trading at right now. And plus we're going up into just natural resistance on the chart and things like that. So, things are overbought here. Things are toppy. We're getting all of the signals that we look for. We actually look for these to finally come off, because they don't come very often, like Bob said, and they're finally here. So just kind of a general warning here for you guys that, yeah, we've been talking about, watch out below, but now the final bell has rung as far as what we look for. And so we're very concerned about, as we go into that FOMC meeting next Wednesday, the potential for an extremely large pullback, especially if he comes in hot.
Yeah, and Phil, we had oil and industrial commodities and gold and silver miners all fell away on Friday. That's a little bit of a harbinger, and I think Bitcoin too started softening as well. So the only thing that was really driving into the end of the day were the Momo tech stocks. They're going to be the last to fall, and as this market goes, they'll fall the hardest
Right.
of all. So, and then we're also JP Morgan's outside of its area of where they like the market to be based on the way they structure their trading. It's called a collar.
Right.
And so they're going to probably be active in the market, trying to bring the market back down with inside of that range that they're most comfortable with.
Yeah, that's on 40. I think that's 4065 on the S&P 500. The ES, which is the futures, trades a little higher by about 15 points currently, but it's essentially where we came back to. We came back to that collar, which is right here. And so normally, if you guys aren't aware of that collar, JP Morgan always has a collar on, meaning they've got like an upper price level and a middle price level and a lower price level, just to kind of put it in layman's terms. And so whenever that market, in the past few months has gone over that upper strike level, and they roll this out every quarter, it's just been borrowed time for the bulls. So that's another bearish piece to the puzzle. And normally we'll go down to the middle of that strike, and I think that's down under 3,700. I think it's 3,600 and change on the S&P 500. So you're looking at like 400 points lower, and typically that acts like a big magnet as things starts to roll over. So just be careful here. Don't be getting crazy going long here, because there's a pretty dangerous spot.
Yeah, absolutely. And so Monday and Tuesday, there'll be a lot of jockeying positions in the markets, and if you're a seasoned trader, you're probably not taking anything. And I know we'll be sitting on our hands, watching, maybe doing some scalping here and there. But, whenever we push really high into a Fed meeting, the expectations are sky high. And somebody that we follow in the markets basically said the Fed's going to have to be super dovish in order for the market to exceed the expectations that have been set for it. And based on looking at the economic data, I don't think he's quite ready to be dovish yet.
I agree. Yeah, this market's pricing in him just basically saying no more rate hikes. And we know that that's not where they're at. If anything, they might come in a little hotter than people are expecting, when I think the market will react violently like it did back in August. You guys remember this too. August was very similar. We ran up. People thought this was like the pivot rally. And he came in and said, sorry. And, things tanked pretty hard. So, it couldn't be as simple as that. Yeah, sometimes, this market has a very short memory. So it wouldn't surprise me if something similar happened. So anyway. All right, well, that's going to wrap it up for us, guys. Again, just a general warning for you guys. Hope it helps. Let us know your thoughts on the market, and let us know how you think we're going to go from here. Do you think we're still bullish? Do you think we're bearish here? Love to hear your thoughts on that as well. And that'll do it for us. So thanks for watching. Please hit like and subscribe, and we'll see you on the next video. Take care.
Trade Genius.